a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Well, the price of gold is up. What about gold ETFs? We're going to find out now from our ETF Research Director, Nina Mishra, who joins me here. So, gold up considerably this year so far.
Yes, so June is a very interesting month.
Uh-huh.
All asset classes rallied this month.
Really?
Stocks, bonds, gold, oil, and even Bitcoin.
Is that something that really doesn't happen often?
Doesn't happen often because they're supposed to have low correlations with each other, different asset classes. But during the month of June, almost everything rallied for different reasons. But gold was one of the top performers. Gold has rallied almost 12% over the past month, and it is now at its 6 years high. And the reasons that contributed to gold's rally, we are going to discuss them. First of all, gold is a safe haven asset. So whenever there are geopolitical uncertainties, and there is no shortage of them now,
right.
with trade tensions and geopolitical risks rising in the Middle East, especially tensions between US and Iran. With those uncertainties, gold has gained due to its safe haven status. Then the Fed signaled that it is ready to cut interest rates soon. So that led to lower interest rates and a weaker dollar. Weaker dollar is good for gold because weaker dollar makes gold prices attractive to consumers in emerging markets like India and China. And these two countries are the biggest consumers of gold in the world. So weaker dollar helps gold, and also lower interest rates are bullish for gold because gold doesn't pay anything. Gold doesn't have any yield. So the opportunity cost of holding gold goes down when interest rates are lower. But when interest rates go higher, investors prefer high-yielding assets, either bonds or high-dividend stocks or other asset classes. But when interest rates are so low and interest rates are negative on government bonds in so many parts of the world, then the opportunity cost of holding gold is very low. Then central banks around the world, particularly in emerging countries, they have been buying a lot of gold in recent years. And in fact, according to the World Gold Council, the first quarter central bank buying of gold was highest in many years. So that also helped gold. Now, the price of gold is, I think, a bit difficult to predict. But I think, and I have said that many times, investors should hold some gold in their portfolio, about 5% of their total portfolio, mainly because gold has low correlations usually with other asset classes, especially stocks. So it acts as a portfolio diversifier.
All right, so that brings us around to the gold ETFs. Now, are they moving in lockstep with the price of the metal?
Yes, a lot, especially the physically backed gold ETFs. They provide a low cost and convenient exposure to the metal. They actually hold gold bars in their vaults, so they are pretty safe. They have low expense ratios, so low cost, safe, because if you buy bars, then you are worried about safety, storage, and everything. So instead of that, you can just hold gold ETFs. But remember, when you sell them, they are treated as collectible for tax purpose by IRS. So tax implications would be higher. Now, looking at gold ETFs, I think investors should consider total costs of owning, including the expense ratio, the fee which the ETF sponsor charges, look at the trading costs, its liquidity, and also gold per share, because there are some ETFs which where each share is equal to about 1/10 of an ounce of gold, and there are others which represent about 1/100th of an ounce of gold. So share price may be lower for some ETFs, and those ETFs may be more suitable for smaller retail investors. Supposing you want to just invest maybe $100, $200, $500 in gold ETF on a platform, on an app which doesn't have commissions
Sure.
or very low commissions, then those ETFs are more suitable for you. But if you want to invest larger amounts and per share commission is important, per share trading cost is important to you, then maybe the gold ETF, which represents 1/10 of an ounce of gold, is more suitable for you.
All right. Let's take a look at a few of these here. There's the SPDR Gold Trust.
So the ticker is GLD. It is the largest, oldest, and most liquid gold ETF. Huge, with 37 billion in assets under management. And it made its inception in November of 2004. Here, each share represents 1/10 of an ounce of gold. It is also one of the most expensive, 40 basis points in expense ratio, but very good for traders, for trading purposes, if you want to invest larger amounts in gold for shorter time. Now, if you want to learn more about this ETF, you can go to the quote page on Zacks.com, and you will see that it is trading around $132, about 1/10 of the price of 1 ounce of gold, which is close to 1,400. And you can, if you want to learn more, you can also go to the external homepage, which is State Street's webpage for this ETF. But there's not much to look at. It doesn't have holdings. Holdings are just gold bars.
Okay. All right. Talk to us about the iShares Gold Trust.
So this is, the ticker is IAU. It is the second most popular gold ETF. Now the difference, which I mentioned, that some ETFs they represent 1/10 of an ounce of gold. So this is one of those. This is also pretty old and pretty popular with investors, with 13 billion in assets. It charges 25 basis points, so it is significantly cheaper than GLD, but of course trading costs may be slightly higher. Now if you look at the quote page for this ETF on Zacks.com, you will see that share price is $13.45, which is much cheaper, 1/10 of the price of GLD. So per share costs are lower for this ETF.
I'm just going to go out in left field here. Never will you ever find a fund that has one share equaling a bar, right?
No.
It's always a fraction of the bar.
Yes, one bar is too expensive.
Be huge. Okay. I just wanted to clear that up.
Yeah, that would be too expensive.
Okay. See where my mind travels,
Yeah.
right? Then there's the GraniteShares Gold Trust.
So the ticker is BAR, very interesting ticker.
Yeah.
And it is one of the cheapest gold ETFs. It actually charges 17.49, which is rounded to 17 basis points. And because of its low fee, they kind of started price war in the gold ETF world. So they attracted a lot of assets, and the ETF now has about 554 million in assets, so pretty liquid. It's not very old. It made its debut in August of 2017. And this also represents 1/100th of an ounce of gold. So suitable if you want to invest smaller amounts and you are not much concerned about per share trading commission, then probably this ETF is suitable for you because of its it charges one of the lowest fees in the gold ETF space. And this is the quote page for this particular ETF. You can read our articles. You can also take a look and listen to a podcast I did with the manager of this ETF, the person from GraniteShares. It's pretty interesting. And, and, as I mentioned, one of the lowest expense ratios ETF.
I'm just going to clear that up. Okay. I just wanted 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 to Okay. Do you own either of these?
I own gold jewelry, but not gold ETFs.
All right. Well, there's a difference there. You can find, thank you for the information, by the way. You can find more on these types of ETFs and other ETF information in the ETF section of Zacks.com. That's our webpage. All you need to do is use the Funds tab in the top toolbar, and it will help guide you there. The podcast that you heard Nina refer to is titled ETF Spotlight, and you can access all of her ETF podcasts in that section of our site. All you need to do is on the homepage, go down to all the way at the bottom of that page and click on the word podcast. Just a lot of interesting guests and a lot of interesting information that we just don't have time to bring you in video form. That's what you'll find with her podcasts. So they are definitely worth listening to. With Nina, I'm Terry Ruffalo.